Many families that I help to retire successfully are looking to share their wealth with other generations. That's not just about passing money on after their death, but about making the best use of it whilst they're still alive and can see the benefit of their wealth transfer. Sometimes I see two generations living into retirement, which brings with it both opportunities and challenges. Research suggests that the number of families with multiple generations in retirement at the same time will exceed 1 million within 20 years. Using your wealth to support each other during your lifetime offers legitimate estate planning and tax mitigating opportunities, as well as opportunities to alleviate the financial burden some generations might be experiencing with higher house prices and struggling to provide for their future pensions. I'd like to share 5 intergenerational planning opportunities with you. First and foremost, make a will and write an expression of wish. This should be the starting point so you can let the next generation know how you'd like your assets distributed on your death. If you have a pension plan or maybe a number of pension plans, make sure you've completed an expression of wish for each pension. As scheme administrators will most likely follow your wishes for how to distribute any remaining pension benefits on your death, subject to certain rules. Secondly, make a lasting power of attorney, both a property and a health and welfare LPA, lasting power of attorney. Whilst no one likes to think about needing to pass control of their affairs and decision making to someone else, the sad reality is that many of us will need to. Having these key documents in place makes the whole process much simpler. Third is to consider gifting. Gifting money or assets to others during your lifetime is a legitimate and excellent way to pass on some of your wealth tax efficiently to loved ones. Doing so consistently as part of a plan to reduce your estate's value for inheritance tax on death can not only make your estate more tax efficient, but provide much needed financial support to the next generation or the generation after that. The cost of property restricts many from getting a foot on the property ladder, so of course gifts could help them. There are various rules and opportunities around gifting. It's really important to keep a record of any gifts you give, because after your death, HMRC will want to see Form IHT 403 completed to show which gifts you've made. This allows them to check that the gifts fall outside of your estate when calculating any inheritance tax your estate might owe. You could use the annual exempt amount of £3,000, which allows you to gift £3,000 to anyone you choose, in small amounts to several people, or one lump sum if you prefer. You can carry any unused annual exemption forward to the next tax year, but only for one tax year. There's also the normal expenditure out of income rule, which allows you to make regular gifts as long as you can prove the amount gifted is from your regular income and is affordable after your normal living costs. Then you have the small gift allowance, where you can give as many gifts of up to £250 per person as you want each tax year, as long as you've not used another allowance on the same person. Finally, if a child is getting married, you can give them £5,000 tax-free, or £2,500 to a grandchild, or £1,000 to any other person. So there's quite a few gifting opportunities you can take advantage over the course of many years to legitimately remove assets from your estate. The fourth intergenerational planning opportunity is related to pension contributions for children. Now, there are a couple of options. The first is to use the gifting allowances I outlined before to make pension contributions on behalf of a child or grandchild. This is a fantastic way to help to boost their pension pot from an early age. In fact, the benefits of doing this can be enormous, thanks to the effects of compounding. Assuming a grandparent started paying into their grandchild's pension on birth at the maximum level of £3,600, that's an annual gift from you of £2,880 and in effect a gift of £720 from the government in the form of tax relief. Taking account of basic rate relief of 20% by the age of 21, assuming the pension pot grows at 4% a year, the grandchild will have a pension pot of over £125,000. And if you have an inheritance tax issue, you'll have reduced your IHT bill by over £25,000. And if the child leaves the money untouched until they reach 57, which is currently the earliest stage they could get at the money, with no further contributions and assuming a 4% growth, it would be worth over £480,000. So it's a win-win situation and a wonderful gift to your grandchild. The final opportunity is again about pensions, but this is about boosting your own pension. For the past 20 years, anyone's been allowed to pay in the £3,600 gross into a pension, regardless of relevant earnings. So as long as you're under 75, you can still benefit from tax relief on personal pension contributions. Relevant earnings for most people is the income from their employment, but when you're retired, you don't normally have any employment income. And the pensions tax relief rules still allow you to pay in £3,600 per year minimum. There are maximum contributions you need to be mindful of, which will depend upon your personal circumstances, but you can continue to grow your pension savings even once you're no longer working. Thank you so much for watching. I hope you've enjoyed this video and it's been useful. If it has, please press the like button now. It really does help my video channel. I have other videos on the state pension, so subscribe to get quick access to those, or check out the description below. My name's Justin King. I'm a chartered and certified financial planner, and my aim is to help you have a successful life. That often involves understanding your money. I host a podcast called the Retirement Cafe Podcast. You might like to check that out. Again, I'll put a link in the description below. And of course, you can sign up for my weekly newsletter, which was packed with inspiration and tips for a successful retirement. For now, I'm Justin King, helping you live your best life.